ICT said if you use this strategy, you'll be able to leave your job within 30 days of using or watching this video. And I'm going to be giving you the full breakdown of the strategy that he's been working on for 10 plus hours in most of his mentorship videos. And I'm going to be giving you everything completely free in this video. So make sure you do actually watch all the way until the end so you can get the maximum amount of value that you actually can. So I've condensed everything down into a small checklist that we're going to be going through today to completely dominate the market. So what we're going to be doing is only trading the London kill zone, which is from 7 a.m. until 11 a.m. on a 5-minute time frame. We've got to mark out the highs and the lows of Asian session, and then we need to identify which part of price actually gets liquidated first. So as you can see, the blue highlighted area is my Asian session right now, and I'm going to be actually marking out the highest point and the lowest point of it. So this is the highest point right there, and this will be the lowest point right here. So as soon as I have the highest and the lowest point done, what I need to do from here on out becomes very, very crucial. Okay, you need to listen very carefully. You need to wait and look for price to actually take out one of these two areas. Let's say price actually took out the lows just like this. This will be a very, very good indicator that we need to go towards the upside. Or if it did towards the upside, just like this, let's say it went up and completely swept the highs, then we would need to trade towards the downside, right? So if I play price forward now, you're going to be seeing exactly where it goes. As you can see, it's completely swept the lows right there, and this can be actually counted as our Asian session liquidity sweep, right? So as soon as we get the liquidity sweep, now all we've got to do is we need to find a breakage of structure where fractional highs / fractional lows have been swept, and then we can reinforce our market structure shift with an engulfing candlestick if it's possible, right? So as you can see, we need to find a fractional high or fractional low that's been swept, and we also need an engulfing candlestick if we can actually find one, right? So I'm going to play price forward now, and until we actually find our market structure shift, and there you go. We just got a very, very good big candle. I wouldn't count it as fully engulfing candlestick. I would say this is a half engulfing candlestick, but it is a very good candle, and we're going to be using this as our market structure shift, right? So this is going to be our market structure shift right there. And as soon as we actually do get a market structure shift, all we've got to do from here on out is identify the fair value gap, and then we overlap the fair value gap with a market structure shift for a high probability, and all we've got to do from then on is execute the trade, right? So that's as simple as it gets. Now all we've got to do is figure out where the FVG is, and I can completely see it, but I'm going to give you guys a moment to guess where it is, right? So it's not this candle, it's not this candle, it's this one right here, right? So this is going to be our FVG I'm going to be using. Just mark it out as my fair value gap, right? So as soon as we do get a fair value gap, now all we've got to do is enter our position, which will be from here. I'm going to be entering my position there, and I'm going to be giving you the best way to place your stop loss and take profit in just a second. But for any of my serious traders who haven't been seeing success or don't have enough time to actually trade themselves, listen, I've got a perfect solution for you. At EMSPass, we completely pass your account and we completely get you funded and get you your first ever payout. So as you can see, we're 7% up on this account right here. This is a client of ours, and we have over $30,000 of profit on this account because he has a 400k account, right? As you can see, this is what we do. So we cover 25% of your account cost. We pass your phase 1 and phase 2 in 5 days, and then we get you a payout in 21 days. There's so much results in this group. Make sure you join the group in the first link in the description, because this is the craziest group of results. We have so much results. You can just keep scrolling up and up. You'll see so many payouts. As you can see, these are all the payouts that we actually got. But the one twist is there's only 5 spots for June. Okay, there's only 5 spots for June, so I need you to join this as fast as possible. First link in the description. But anyway, this is what I'm going to be doing. By the way, you never pay before you actually get the payout. We only request a payment after you get a payout, right? So all you have to do from here on out is literally actually put your stop loss below here to the first candle of the FVG and place your take profit at a 1 to 3 risk to reward ratio. Or you could actually put it as Asian sessions highs, but I want to do it at least a 1 to 4 risk to reward ratio. Okay, so that's gonna be what my trade is. There we go. Let me just remove this right here. So if I just zoom out really quickly, you're gonna see exactly how this trade will actually run up towards our favor and how it will completely smash take profits. So as you can see right there, it's just entered our actual market right there. And as you can see, all these candles, all these wicks, all the wicks are actually below the FVG, but none of the candles actually closed below the fair value gap, which is a very good indication that price will actually go all the way up and completely smash our take profit. So as you can see, that's a very, very big candle there, and we're just waiting. And as you can see, gone up, completely smashed our take profit, a 1 to 4 risk to reward ratio. We could have easily made around $2,000 just from this trade, right? Easily made $2,000. So this is what you guys need to actually get in your mind, because these examples and these trades that I actually do show, they do actually work in real life scenarios, right? So now what I'm going to be showing you is on a fundamental level how the strategy actually works. So what you're waiting for is Asian session to actually end first of all, right? So you're waiting for the Asian session to end. So let's say we got candles like this, and then price actually gave us our trading time, right? So we need to mark out the highest point and we need to mark out the lowest point of Asian session. So as soon as we actually do that, what we need to do next becomes very, very crucial. You wait for price to actually take out one of these two areas. Let's say to cut the highs. Soon as it takes out the highs, you mark this out as your liquidity sweep right here. I'm gonna just put a few dollar marks right there. So that's our liquidity that's completely been swept. This is our Asian side liquidity, right? So as soon as our Asian side liquidity gets swept, what we're looking for now is price to actually give us a market structure shift, right? So it needs to give us a very, very distinct market structure shift, which is like this, and it breaks on itself. So this is the breakage of structure / market structure shift. So this is what we're looking for, and it's exactly what we got. And as soon as we do actually get this market structure shift, all we've got to do from here on out is actually place our rectangular tool and actually mark out our fair value gap, which will most likely overlap with the market structure shift. So as soon as we do get this fair value gap, all we've got to do from here on out is very simple. We are trading a reversal, so we will short position this right here and place our stop loss just below the first candle of the FVG, and then we're going to be placing our take profit as a 1-to-4 risk to reward ratio instead of a 1-to-3. This is usually how I make over 3% every single day on my trades, and you can start making this too. So as soon as you do that, all we've got to do now is actually wait for price to enter back into this FEG area, and it will go up and completely smash take profit after bouncing off of it. So this is actual real chart behavior right now, and I'm going to be showing you what a fractional low actually is. So a fractional low is a series of 3 candles, right? So let me just show you on a big scale what it looks like. So let's say this is a low right here. Let's say it just continues going on, whatever. Okay, so let's say that's the actual market, and we're looking at this low right here. So if you zoomed in, the low right there will look something like this. So we'll have a 3 candle pattern at the bottom bit, which actually does look something like this. And so the middle candle will always be the lowest for it to be a fractional low. If this candle was actually lower than this one, then the middle one would not be a fractional low anymore. So this candle has to be the middle one, which is the lowest, and this is why we call it a fractional low, because no candle, either the one before it or the candle after it, does not go below it, and that's why we can actually mark this out as our fractional low, right? So that's exactly why. If you want the indicator name that I actually did use in this example, just comment down below indicator and comment the country that you're from, and I'll completely send it to you completely for free, and I'll just reply to your message. But anyway guys, this is gonna be the end of the video, and I'll have a complete banger for you tomorrow for you to watch, and if not already, you can watch it up there on the top right. But anyway, I'm gonna see you in the next video. Take care guys.